Hey guys, thanks for checking out this week's FinPrep Trading and Investment video newsletter. So that negative divergence we were talking about on the weekly chart on the SPY actually ended up playing out a bit here this week, which is nice to see. So basically going again over that was negative crossover in the weekly MACD, as well as you had price drifting up slowly off this 20-week moving average, yet your weekly MACD was drifting downward, which we gave out as, often a precursor to further downside actually in the market. And it did turn out to be, which was nice. We took a short here on Wednesday, covered about 40 cents off the lows on Thursday, which ended up being a pretty strong day, but closed near low day on Friday. So it looks like further downside may still be in the cards here for SPY. We'll see. Whereas price was previously kind of capped by this 50-week moving average in blue here, we're now kind of hanging out below even the 20-day moving average, which is drifting sideways and may end up hooking down. So we'll see what happens. Still looking at potential targets for setting up some longer-term swings to the long side down at 210 or 207, where you have the rising 200 and 250-day moving average. And should that be even taken out, then looking around this 203 level where we have this long-term trend support off basically the financial crisis lows, stretching back here to March of 09, in through 2011 sell-off. I think this was Euro crisis and so forth. And then in through our latest fit we had at the end of August in 2015. This kind of flash crash low that we were talking about when we were talking about the pound as well. So those are kind of our three levels of potential support that we're eyeing should we get further downside. We don't have any shorts position for SPY currently, but we'll see how the week ends up developing. So that's what's going on there. In the event we get strength kind of immediately out the gate, one area where we will look to play is this IBB, which is basically a biotech, one of the biotech ETFs. And an interesting component to why this guy is of interest is price is sitting right on the lower end of a price channel, or declining price, not really trend, but what would be essentially a price channel. It kind of coincides as well with the 61.8% Fibonacci retracement from the low of year to high of year. So you basically retrace about 2/3 of that price gain as a potential spot for another move higher. Obviously, given how bad of a week it was, our declining price environment we had, basically stochastics are oversold on the daily level. So, and interestingly, price sitting here right at the 200-week moving average, right? So you saw the last time you have low of week here on Biotech, boom, nice pop, nice pop, nice pop. A bit of a false breakdown, but the next week, once it did recover, it certainly has rallied and rallied hard off. I think that was in June. So basically summer time frame, and from this, kind of perceiving this as bullish consolidation, particularly if we don't lose this lower trend line. So biotechs are definitely a place we're looking out for longs should SPY surprise to the upside kind of immediately out of the gate this week. We shall see. All right, so talking about the dollar index, basically we discussed last week looking at a revisiting of this prior high in and around this 25.20 that ended up playing out, and also the price target off the pennant formation applied to the breakout, just simply the height from here to here, ended up playing out beautifully. So 25, I believe it was 30 was that, and it hit there. So dollar overstretched at this point, overbought, wouldn't look to get involved on the long side here. Any further strength in dollar, we're looking to play more as a shot against the commodities on the short side. So that's actually, we got a small position on short gold here, only because gold's off that nice blast low, which is really the move should have captured. But price seems to be consolidating in bearish fashion. Obviously, you got the 9 EMA rapidly declining and closing in on price, but price unable to close above the 200-day moving average. So it looks like maybe, we are still talking about 114, 115 and a half in that zone for adding to longer term swings on the long side, but trying to take a short off this. Any breakdown below here would be nice. First kind of target would be this 117.20, which is your 250-day moving average, and also probably more importantly would be your 50-week moving average at 117.50. So probably would look to cover there depending on how price behaves, of course. So hopefully that trade plays out. We'll probably, and if we get stopped out in and around this 120.5-ish area, perhaps this 9 EMA as it's coming in on price. So we'll see what happens with that trade. It could go either way, but it does seem to be consolidating in a bearish fashion for a little bit further downside in gold on the back of a strengthening dollar. So the strengthening dollar correlates with the falling yen as well as euro. The yen is the more instructive chart for us. So basically yen triple topped here at about 96.60. We had this very strong increasing price channel for the majority of the year, particularly beginning in February of 2016. And price here, the past approximately 7 days, broken down out of that increasing price channel. This matters, and looks like it's similarly just kind of chopping around, perhaps working off some of that selling pressure with a view to move lower. And if that happens to be the case, we're eyeing still again that short on gold, because here is the 20-week moving correlation between FXY, so the yen tracking ETF, Japanese currency, and GLD ETF, which tracks gold more or less. So our gold price, shall I say. So you can see, particularly with regard to 2016, very strong positive price correlation. That's probably averaging close to 0.8, but currently sitting at 0.6, so very strongly correlated. So any further downside in yen would most likely coincide with further downside in gold, and that is what we are currently positioned for, at least just in the short term. We shall see what happens. All right, and finally, just wanted to touch on bonds. So looking at the long end of the Treasury yield curve, this is TLT, 20-year plus ETF, so pretty price sensitive. The long view is basically a very strong price channel. We had a bit of a false breakout, and in retrospect, obviously, that would have been the place to reduce positions with regard to fixed income. As we seem to have had bullish consolidation, I was kind of anticipating a breakout. Didn't end up to be the case. We had a breakdown here off that trend line in early September. A revisiting of this downtrend where we had multiple days touches at the onset. We had a touch here, which produced a bounce, a touch here, very quick retouch, which produced another good point to pivot out. And so here we are down again, back at the lower end of that trend line, also in and around the 250-day moving average, and coinciding very nicely with the 50-week moving average once again. So a bounce here would be very welcome, and we'd probably use that actually to reduce some of our longer-term bond exposure. So that is what we're looking at. A lot of ground covered here this week. So we'll see what's going to happen. Things getting exciting. A lot of movement, even though SPY is somewhat mute. We are getting a little bit of volatility and moving accordingly. So that is what's going on, guys. Hope you enjoyed the video. Talk to you next week.